On my right, our business editor, Owen Fairclough. He's here and he's going to start with the rapidly escalating Spanish banking crisis. Prime Minister Rajoy saying he doesn't need a bailout.
And yet some would say, Stu, already he's trying to get a bailout by the back door by basically trying to finance the rescue of Bankia, the state nationalisation of this bank, by going to the European Central Bank to try and get collateral. It's a deeply unorthodox move. We've yet to even hear from the European Central Bank as to whether they will play ball on this, because it's not really their style. It also raises questions not just about Bankia, but about the extent of the losses in Spain's banks, and particularly whether they are starting to hide the scale of those losses. Oliver Farry has the details.
Spain's troubled lender Bankia is in desperate need of a bailout, and the Spanish government is suggesting a novel way of financing it. Madrid is considering recapitalising the company with 19 billion euros of government debt in return for equity in the bank. This in turn would then be financed by cash from the European Central Bank. It's an unprecedented move, viewed with scepticism by many analysts. Others, however, say it might just work.
It is true that if we consider all the help Bankia has had so far, and the potential help that other banks might need, then the deficit would increase, and all this would have consequences on the sovereign debt rate. Maybe some help could be given, not affecting the whole country, but maybe only the financial sector.
Bankia was formed last year from a fusion of 7 savings banks and nationalised at a cost of 23.5 billion euros. It was among 16 of the country's banks downgraded by Moody's earlier this month for non-performing loans. Its share price tumbled 28 cents on Monday as markets got jittery on news of the impending bailout. But the Spanish government indicated it had not yet approached the ECB about the move. Prime Minister Mariano Rajoy continues to insist there'll be no bailout.
There will be no external bailout of Spain's banking sector.
But that may simply be a semantic nicety if the government is reliant on the ECB to greenlight the move.
Just to add to that, Stuart, here's why the Spanish government is in a real fix right now. We've seen those borrowing costs for Spain going up and up, even before they nationalised their Bankia. So they need to find around $23 billion. Normally, for most countries, it's fine to go out to the debt markets and raise money. It shouldn't be a problem for Spain, but it is a problem when you're paying that kind of interest. You can see there the borrowing costs of Spain over the long term for 10 years, 6.5%. We are approaching bailout territory. Remember, many other European countries have already raised the flag when their borrowing costs reach 7%. This is why they're having to do these sort of backdoor mechanics by effectively going through Bankia to raise money from the European Central Bank, because in the debt markets, it's getting too expensive for them to finance that debt. They can get it effectively more cheaply from the European Central Bank. All of that, as you'd expect, weighed very heavily on European markets on Monday. The Asian markets, more of a mixed picture, it has to be said, this Tuesday morning. The Nikkei is broadly up, but not making any huge gains once again. You can see there, followed by the Hang Seng and the Kospi. Just a word on unemployment in Japan. One of the reasons markets are ticking along a little bit is that unemployment isn't quite as bad as people thought. Just over 4.5% according to the latest data. But worth mentioning that Panasonic, it's reported in the Nikkei newspaper, is announcing it's going to halve its 7,000 strong workforce in Japan, with up to 4,000 redundancies there.
Let's pick up on a few more of the day's business news headlines now. And BP's Russian venture has been shaken by a new high-profile resignation. The billionaire Mikhail Fridman has quit as chairman of TNK-BP. It's understood that the AAR consortium that owns half the firm were unhappy with Fridman's leadership. In 2008, the former CEO Bob Dudley, who now runs BP, was forced out after clashes with Russian shareholders.
Repsol is meeting its own shareholders later this Tuesday to discuss how to fund new investments in the wake of the YPF scandal. The Spanish oil giant lost control of its Argentinian subsidiary earlier this year to President Cristina Kirchner. YPF had contributed a quarter of Repsol's operating profit. According to Bloomberg, Repsol will now cut its €1.4 billion dividend pool to protect its dwindling credit rating.
And China is to allow direct trading of its one currency with Japan's yen. From next month, foreign exchange traders will be able to swap the currencies without any longer using the dollar as the benchmark. It's the latest sign of the liberalisation of China's money markets, opening up to more foreign investors.
Now, as you'll have heard a little earlier in the news, students and authorities in the Canadian province of Quebec are sitting down to negotiate an end to a 3-month student strike over a rise in tuition fees. For businesses in cities like Montreal, any settlement of this dispute cannot come soon enough. Many of them now say that the enduring clashes are starting to really hit their bottom line.
Another dusk demonstration on the streets of Montreal. But the casserole's bashing of pots and pans is being heard all over the world. That could have serious consequences for the city's small businesses. With festival season round the corner, tourists are being scared away.
We've seen a real slowdown. Our sales have declined by almost 50%. Our loyal customers who come every year say they'll wait till the strikes end before buying tickets.
Hotels, restaurants and shopkeepers are all reporting a drop in turnover. Montreal's Chamber of Commerce estimates the losses at around 40%. It's calling on authorities to take urgent action.
On some streets, on certain streets, traders have been seriously affected. Some hotels have seen their reservations decline by around a quarter from the same period last year.
Businesses in the area are demanding a post-crisis strategy. They want authorities to raise Montreal's profile to distract from the images of protesters clashing with police.
And just before we go, we've got some humble pie puns. They're all coming back once again because the UK's pasty tax is back again.
We're going from casserole pots in Montreal to pasties in the UK, Stuart. There's got to be a link there somewhere. The UK government has partially U-turned on one of its more controversial taxes. If you've been following this, you'll probably know, as Stuart says, all about the humble Cornish pasty. It did become unexpectedly a very important debate. The UK government, just to recap, wanted to apply a 20% VAT tax to Cornish pasties. It was a loophole, effectively, on this if they were classed as hot food, if they were to be left out on the cooling rack in bakers up and down the UK. Predictably, there was a massive outcry over this. It was seen as unfairly penalising people who enjoy a sausage roll or a Cornish pasty. They have now announced that that pasties and other hot products in bakeries, if they are left out to cool, will not be classified as hot food and therefore are not subject to this VAT charge. There you go.
Our food
the important
expert.
news of the day.
Oh, he's a fair club.
I wouldn't call it the most pressing debate right now.
The latest on the pasty. Can you do some kind of graphic showing sales of pasties in relation to this debate?
Do you know anywhere that
That
sells
would be
them
good.
in Paris?
Not near here.
I can't think of anyone.
No, we might get some cold ones in Marks and Spencer's that we can warm up. You never know. All right, Owen, thank you very much. Owen with the business, of course, every day at this time here on France 24, the very latest from Egypt and the rest of today's stories with Claire after the break.